India's financial history dates back thousands of years to the ancient civilizations that thrived in the Indus Valley. Among these early societies, the Harappan civilization stands out. They developed a rudimentary financial system based on bartering, an exchange mechanism devoid of any standard currency. Goods and services were traded directly, a sack of grain for a pot of oil, a tool for a piece of clothing, and so on. But as societies grew and economies became more complex, the need for a standardized medium of exchange became evident. Enter the Maurya dynasty, where we see the shift from commodity money to metallic money. Coins made of gold, silver, and copper started to circulate, each with a distinct value. This marked a significant evolution in the financial systems of ancient India. This early financial system laid the foundation for the economic structures that would follow. It was a spark that ignited a long journey of financial evolution, a journey that we are still on today. As we move into the colonial period, we see significant changes in India's financial landscape. This era was a major turning point, marked by the introduction of paper money. Imagine this: the British East India Company became the first to issue paper currency in India during the early 18th century. A revolutionary concept, wasn't it? This not only changed the way transactions were made, but also laid the foundation of a modern financial system. But that's not all. The colonial period also witnessed the establishment of the first banks. The Bank of Hindustan, for instance, emerged as one of the earliest banking institutions, paving the way for a more organized sector. Alongside presidency banks were set up in Calcutta, Bombay, and Madras, further strengthening the banking infrastructure. However, the real game changer came in the year 1935 with the creation of the Reserve Bank of India. This marked a significant milestone in India's financial history. The Reserve Bank of India was established as the central banking institution, entrusted with the responsibility of controlling the monetary policy of the Indian rupee. It played a pivotal role in shaping the economy and continues to do so even today. The colonial period saw the beginning of a modern banking system, setting the stage for post-independence economic reforms. From the introduction of paper money to the establishment of the Reserve Bank of India, each step was instrumental in laying the groundwork for the financial juggernaut that India is today. Post-independence, India embarked on a path of extensive economic reforms. The thrust of these reforms was the nationalization of banks, a major shift designed to redirect funds to the less privileged sectors of society. This move, implemented in two phases, first in the late 60s and then in the late 70s, brought the majority of banking assets under state control. Around the same time, the Indian rupee was introduced as the national currency, replacing a multitude of coins, banknotes, and hundis that had been in circulation. This was a significant step towards unifying the Indian economy and fostering a sense of national identity. However, the real game changer came in the early 90s. With the economy on the brink of a balance of payments crisis, India had no choice but to embrace economic liberalization. The government rolled back regulations, slashed tariffs, and opened up the economy to foreign investment. These measures, although initially met with skepticism, proved to be a turning point. India's GDP growth rate skyrocketed, the middle class expanded, and the country emerged as a major player in the global economy. The liberalization of the 90s also paved the way for the rise of India's IT sector, now a powerhouse in the global tech industry. These reforms marked a new era in India's financial history, transforming the country into a global economic player. The path wasn't always smooth, but the results speak for themselves. In the 21st century, India has witnessed a digital revolution in its financial sector. A wave of innovation has swept the nation, bringing with it the rise of digital payments and online banking, the likes of which were previously unimaginable. Tech-savvy entrepreneurs have seized this opportunity, birthing a new generation of fintech startups. These companies are disrupting traditional banking systems, offering services that are faster, more convenient, and accessible to a broader population. Two key events have accelerated this shift. The introduction of the Goods and Services Tax, or GST, in 2017 made it easier for businesses to operate across state lines, encouraging the growth of e-commerce. Simultaneously, the demonetization of high-value currency notes in 2016 compelled millions to embrace digital payments overnight. This digital transformation has redefined India's financial landscape, pushing the boundaries of what's possible in the realm of finance. From ancient barter systems to digital transactions, India's financial history is a rich tapestry of innovation and resilience. From the ancient financial systems through the colonial period to post-independence reforms and the digital revolution of recent years, we've seen a remarkable evolution. Each era has brought its own trials and triumphs, shaping India's financial landscape into the dynamic entity it is today. As we look to the future, one thing is certain: India's financial story is far from over.